Hi there, welcome to The Trade. Let's get across what's driving markets. And parts of the U.S. economy, particularly housing, may already be in recession due to high interest rates, at least according to U.S. Treasury Secretary Scott Bessent, who's repeating his call for the Fed to accelerate interest rate cuts. This, though, is at odds with some Fed members, such as Jeffrey Schmid, who voted against a rate cut. He says the labor market is largely in balance. The economy still has momentum and inflation is still too high. Fellow Fed member Lori Logan said that she would find it difficult to cut rates again in December unless there's clear evidence that inflation will fall faster than expected. Meanwhile, Chinese President Xi Jinping has proposed establishing a global body to govern artificial intelligence and position China as an alternative to the United States on trade cooperation. Speaking at the APEC summit, he said that a World Artificial Intelligence Cooperation Organization could set governance rules and boost cooperation. The U.S. two-year Treasury yield fell to 3.57%. The 10-year yield fell to 4.08%. Markets pricing in a 60% chance that the Fed will cut rates by 25 basis points at the December meeting. The Australian three-year government bond yields are sitting at around 3.63%. Markets are pricing a 5% chance the RBA will cut rates by 25 basis points at tomorrow's meeting. U.S. dollar index rose on Friday. The Aussie dollar is at 65.4 U.S. Well, all that sets us up nicely to have a chat with Louise Bedford, who's joining us from the trading game. Louise, nice to see you. Hot, cold, something in between. Let's start with the starting point always being the All Ords.
Yes, the All Ords is just been fantastic to watch. It is currently quite hot, and when we actually look at the chart, it has got a low volatility rate of only 1.83%. So we're above our moving average. I've got a 30-week moving average there, and it's an EMA for those that want a little bit more detail, which is an exponential moving average. So it's weighing the most recent data to a greater extent than the earlier data in that EMA 30. The volatility is low, which means the macro is on, which means we can invest, which is a lovely thing.
Woo! We can invest. Can we invest in the top companies here in Australia? Some of our blue chips have been getting hit pretty hard.
It's so true, and this is where often in a time of pain, we fly to safety, and currently things are quite buoyant, which means not only is the ASX 20 considered to be a cold sector, but when we look at the 100, as well as the 300 in the next two slides, they are also cold, which is quite interesting. This means that the majority of opportunities are under the ASX 300. And for us to capitalize on this, we need to run our scans as technical analysts across the entire market, thinking that we're doing ourselves a favor by sticking to those high market capitalizations. That won't actually bring in the extra dollars at this time.
What happens if we take a few steps back, extend our lens, widen the lens, and look at the ASX 200 or 100? Let's start there.
Now with the ASX 100, when we look at the lower panel, which is the relative strength comparison, we do have that blue line in that lower panel underneath its own moving average. So this is cold as well. And with the very next slide, the ASX 300, you'll see a very similar pattern, but perhaps not quite as broad and indicative. Look at how flat that RSC line is, which is meaning that as we move down through market capitalisation, we've got more of a chance of things outperforming the All Ords, which is fascinating to see.
Yep, and the 300, so looking even wider.
So when we have a look at the specific sectors that might be cold and hot and in limbo, let's have a look at information technology. This is a bit of a surprise because this one has turned cold. It's underneath its moving average. It's up against a fairly significant resistance line. And also, when we look at it in comparison to the All Ords, it's definitely underneath its moving average. Now, if you're after a full list of all of the hot or not sectors, you can come to tradinggame.com.au/hot or not. I prepare a special report every single time I'm on AusBiz for the AusBiz listeners and watchers so that they can have the full picture about what is happening in the Australian market and what to trade this week.
Well, thanks for that, Louise. I would like, though, to get your view on small companies, because we've been talking a lot here on AusBiz about the opportunities in the smaller end of the market and the outperformance that we've seen so far this year. Can it continue?
How beautiful is this little chart? This is the Small Ords. We are outperforming the All Ords. And also, if we have a look at that final candle that has been produced there, that is actually something to keep your eye on. For those who are good with candles, you'll see that that is a doji and it's likely to reverse that tiny little mini 3-week downtrend. Now, I'm saying likely, we need probability here. It's not a definite, but dojis are a strong reversal sign. In a very hot chart like this, it is likely to continue going up.
Okay, so there we go. And then how does that compare with the 200? Because so far this year, it's outpaced the 200, the smaller end.
Yes, it's true. It has. And when we look at the 200 financials, we'll see that this one is actually in limbo. So I do know that there are quite a few people going, why is CBA doing what it's doing? And of course, that takes up a lot of the ASX 200 financials. But when we're looking for opportunities, we're looking for a clear, hot signal rather than something that is in limbo. So it might be better to stick with the Small Ords rather than those in financials, and definitely not focusing on information technology this week.
Yeah, cool. All right, and we've got the banks reporting as well, just from a fundamental perspective. What about overseas? Because it was yet another strong week for the S&P 500 and the NASDAQ. S&P 500, I mean, is it not ready for a breather, Louise?
That is something we can never tell until it happens. As technical analysts, we just look at the chart and aim to keep our technical analysis based on the here and now. And what we can see here is only 2.18% volatility. So it is not flinging itself around a heck of a lot, which makes for easier trading. And it is actually outperforming the All Ords. However, if we look at the NASDAQ is actually outperforming the S&P 500. As well as outperforming the All Ords. With 2.78% volatility, it's fairly low volatility for the NASDAQ. Often with the NASDAQ, it is a more volatile type of market to get involved with. But if you're looking for the place to put your money in an overseas market this week, the NASDAQ is where it's at.
Well, that is a definitive statement that will end on. Louise Bedford from tradinggame.com.au. Thank you so much for joining us.
Such a pleasure.
And I'd encourage you guys to go take advantage of it. I mean, she's doing the work, some of the work for you. So you can go there and look for that AusBiz special report. That does it for this episode of The Trade. We'll be back with more tomorrow.